Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 18th of May. All right, just coming through the Asian session, it's pretty clear and obvious what's going on. We've got the equity markets in control at the moment. So the bonds, a little bit mixed. If you look at the US equity futures, equities are up, risk on profile, dollar block goes up, dollar goes down. That's the general structure of what's going on. Just check out the action though, right? So the Asian session, very quiet. A lot of activity. I mean, the Aussie and things will pick up Wednesday, Thursday, but at the moment, there's very little momentum going around because there's no sort of major data. It will pick up today, though, with UK employment numbers, average earnings, etc. That should sort of give the market a bit of a kick with regards to sterling, give it some momentum. But outside of that, it's pretty easy. Equities are up, buy the dollar block, sell dollars. It's as simple as it is at the moment. And I think the dollar is in for a bit more of a run to the downside. Okay. And if you look at if I bring you over to the bigger charts, or give you a look at the big cross section of majors, they're within current majors at the moment, but they are drifting lower, right? Even the dollar yen's drifting. I mean, dollar CAD it's gone for all money. Euro's close. No one really wants to take it on yet. Sterling's just a bit above. So you know what? If we get strong UK employment numbers, it may give sterling a real kick to the top side. Aussie is starting to sort of battle away. If anything, these trend lines here, you could probably get rid of those two, Aussie and Kiwi, because they're sort of just a bit too short term. These ones are struggling, but they will catch up if sterling and euro go top side. Now, that's the direction for the dollar just at the moment, but we are, you know what? There's just a lack of cohesion with the data, US numbers, the Fed trying to slow things down as far as interest rates go. So the dollar's losing a bit of mojo, but it's not drastic, right? I'd love to see a cleaner move. It may come with sterling taking things to the top side. The good thing is, right, so keep an eye on the equity markets, US equity markets. Risk on, risk off seems to be the way of it. So if you do see clear risk on day, that should be enough to kick these the dollar block to the top side and push the dollar down. Now, the good thing is, I know we are lacking a bit of momentum, but we do have trend lines on most pairs, right? Even dollar CAD sticking around that longer term one. On the downside, we've got dollar index, top side, euro, sterling's just a bit through it. We've got a bit of a way to get the Aussie up towards the resistance there to have a crack, but you know what? And dollar Swiss is also there. We've got plenty of opportunities. We just got to nail the direction and when that momentum kicks in. And that's where the data comes back in. So keep a close eye on it. It's a good chance, especially with the way things are poised. If we did get some significant numbers here, and actually the claim account change just out, and the employment change, this should be sort of rolling out as well. Good timing. I didn't even focus on that. So minus 15,000, that's not much change. 4.8% interest unemployment rate. Just keep an eye on these two puppies here. See if they come out while we're talking about it, and see how it sort of rolls. At the moment, those numbers aren't going to do anything as far as ignite sterling. I can tell you that. And just having a look, I mean, yeah, I mean, this is like, I like to see what's happening. As I said, equities up, dollar block up, dollar down, simple, right? Don't think that's going to hold up. Once the US session kicks off, right, you're looking up here at the major equities. Now, if they start to go up or down, that will reconnect that risk on, risk off profile. Average earnings a little bit high there. And this is pretty crap from the way this is being released. I mean, I can't imagine it's Metastock sort of holding things up, but the average earnings a little bit better. I mean, all these numbers are supposed to come out right on 1600, and it's 1:30 late. So I don't know what the hold up there is with that UK data, but once again, this isn't significant data that's going to really change anything at the moment. Just keep abreast of what's being pushed around the market, so you're in the loop. Dollar drops as yield support fades amid expectations of low US rates. Well, the Fed's come out and told us like at least 5 to 8 times that they're not going to do anything. I think the market's starting to get the drift, and that's where the dollar weakness could accelerate. Now, we're just starting to get the last components there of the numbers. the UK numbers. Okay, the actual employment change was pretty good, but not massively high. Across the board there, those UK numbers are not going to do much actually, and the average weekly earnings being 0.5% worse is going to offset any strength in the other numbers, right? So don't hold your breath. I thought there might be a bit of a chance there, but I can't see it happening at this point. All right, so with these UK numbers out of the way, keep an eye on the GDP numbers, flash estimate out of the Eurozone out in, what is that, 3 hours. And then, you know, it's a pretty quiet session right through till tomorrow. So that's probably why the major currency pairs aren't really moving too far at this stage. My tip is keep an eye on the US equities, and that hopefully that gives us some idea of risk on, risk off. That seems to be what's driving the market at the moment. I think we're close to a big trade coming up. We just want to see a bit more dollar weakness, nothing to do with dollar strength, and that'll give us the trade. All right, guys, have a good one. All the best. Cheerio.